Welcome to Thoughts on the Market. I'm Michelle Weaver, U.S. Thematic and Equity Strategist.
And I'm Arunima Sinha from the Global and U.S. Economics teams.
Today, an encouraging update on the U.S. consumer. It's Tuesday, June 3rd at 10 a.m. in New York. Arunima, the last couple of months have been challenging, not only for global markets, but also for everyday people and for individual households. And we heard pretty mixed information on the consumer throughout earnings season. Quite a few different companies highlighted consumers being more choiceful, being more value-oriented. All this to say is we're getting a little bit of a mixed message. In your opinion, how healthy is the U.S. consumer right now?
So, Michelle, I'm glad we're starting with the sort of upbeat part of the consumer. The macro data on the consumer has been holding up pretty well so far. In the first quarter of 25, consumer spending has actually been running at a similar pace as the first quarter of 24. Nominal consumption spending grew 5.5% on a year-on-year basis. Goods were up almost 4%. Services were up more than 6%. So all of that was good. What our takeaway was that we had a lot of strength in good spending, and that did probably reflect some of the pull forward on the back of tariff news. But that pace of growth suggests that there is an aggregate consumer, they have healthy balance sheets, and they're willing to spend. And then what's driving that consumption growth from our point of view? We think that labor market compensation has been running at a pretty steady pace so far, so more than 5.5% quarterly analyzed. PCE inflation has been running at just over 3%. And so even though equity markets did see some greater volatility, they didn't seem to impact the consumer, at least in the first quarter of data. And so we've had that consumer in a pretty good shape. But with all of this in the background, we know tariffs have been in the news, and tariff fears have weighed heavily on consumer sentiment. But then tariff headlines have also become more positive lately, and consumers might be feeling more optimistic. What's your data showing?
So that really depends on what data you're looking at. We saw a pretty big rebound in consumer sentiment if you look at the Conference Board survey. But then we saw flat sentiment when you look at the University of Michigan survey. These two surveys have some different questions in them, different subcomponents. But my favorite way to track consumer sentiment is our own proprietary consumer survey, which did show a pretty big pickup in sentiment towards the economy last month. And we saw sentiment rebound significantly for both conservatives and liberals. So this wasn't just a matter of one political party, having a change of opinion. Both sides did see an improvement in sentiment, although consumer sentiment for conservatives improved off a much higher base. The percent of people reporting being very concerned about tariffs also fell this month. We saw that move from 43% to 38% after the reduction in tariffs on China. So people are concerned a little bit less there, and that's been a really big thing people are watching.
Feeling better about the news is great. Are they actually planning to spend more?
So encouragingly, we did also see a big rebound in consumers' short-term spending outlooks in the survey. 33% of consumers expect to spend more next month, and 17% expect to spend less. So that gives us a net of positive 16%. This is in line with the 5-year average level we saw there, and up really substantially from last month's reading of 5%. So 5% to 16%, that's a pretty big improvement. We also saw spending plans rise across all income groups, though we did see the biggest pickup for higher income consumers, and that figure moved from 12% to 31%. Additionally, we saw longer-term spending plans, so what people are planning to spend over the next 6 months, also improve across all the categories we look at.
And were there any specific changes about how the consumers were responding to the tariff headlines?
Yeah, so people reported pulling forward some purchases due to fear of tariff-driven price increases. So people were planning for this. Similarly to what we saw with companies, they were doing a little bit of stockpiling. Consumers were doing this as well. So our survey showed that over half of people said they accelerated some purchases over the past month to try and get ahead of potential tariff-related price increases. And this did skew higher among upper-income consumers. The categories that people cited at the top of the list for pull forward are non-perishable groceries, household items, so both of those things you need in your day-to-day life, and then clothing and apparel as well, which I thought was interesting, but That's been one thing that's been in the news a lot that's heavily manufactured overseas, so people were thinking about that. And this does align overall with our March survey data, where we asked what categories people were most concerned about seeing price increases. So their behavior did line up with what they were concerned about in March. Arunima, your turn on tariffs now. The reason tariffs have been on consumers' minds is because of what they might mean for price levels and inflation. Throughout earnings season, we heard a lot of companies talking about raising prices to offset the cost of tariffs. What does this look like from an economist's perspective? Has this actually started to show up in the inflation data yet?
So not quite yet. And that's something that, as you might expect, we're tracking very, very closely. So one of the things that our team did was to think about which types of goods or services were going to be impacted by inflation. And so we think that first order effects are going to be on goods. And we think that the effects could start to show up in the May data, but we really see that sequential pace of inflation starting to step up starting June. And then in our third quarter inflation estimate, we see that number peaking for the year. So in the third quarter, we think that core PCE inflation number is going to be about 4.5% Q-on-Q annualized.
And then aside from tariffs and inflation, how are people going to be affected by a fiscal policy, specifically the tax bill that just passed the House?
So the House version of the bill has government spending reductions that can be quite regressive for different cohorts of the consumer. So we have reductions around the Medicaid program, cuts to the SNAP program, as well as possible elimination of the income-driven loan repayment plans. So all of these would have a pretty adverse impact on the lower income and the middle income consumers. This could be, but will likely not be fully offset by the removal of taxes on tips and overtime. And then on the other side, the higher income consumers could benefit from some of that increase in SALT caps. But overall, the jury is still out on how the aggregate consumer will be affected.
So taking this all into account, the effects of fiscal policy, of tariff policy, of labor market income, what's your overall outlook on U.S. consumption for the rest of the year?
So we recently published our mid-year outlook for U.S. economics, and our forecast for consumption spending over 2025 and 26 does see the consumer slowing. And this is really due to three factors. The first is on the back of those greater tariffs and the uncertainty around them, and the fact that we have slowing net immigration, we're going to be expecting a slowdown in the labor market. As the pace of hiring slows, you have a slower growth in labor market income, and that really is the main driver of aggregate consumption spending. And then, as we talked about, we are expecting that pass-through of higher tariffs into inflation, and that's going to impact real spending. And then finally, the uncertainty around tariffs, the volatilities in equity markets could weigh on consumer spending and may actually push the upper income cohorts, the big drivers of consumption spending in the economy, to have higher precautionary savings. And so with all of that, we see our nominal consumption spending growth slowing down to about 3.9% by the end of this year.
Well, a little unfortunate to wrap up on a more negative note, but we are seeing, mixed messages and some more positive data in the near term at least. Arunima, thank you for taking the time to talk.
Thanks so much for having me, Michelle.
And thank you for listening. If you enjoy Thoughts on the Market, please leave us a review wherever you listen to the show and share the podcast with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.